Well, good evening, all. I'm Epstein, and here we are with your SPDR ETF stock market wrap-up, and this wrap-up is for the evening, as we're here now on Thursday, the 3rd of October, 2024. Well, tonight there's some big news. I've already gone through it on my other videos, so if you've seen that, you want to skip this, I get it, and we'll then get into the charts. But the port strike has been suspended. So the union, and I want to applaud the union, this is important to all of us, all right? They said that they're going to suspend until January 15th. Talks will continue. Supposedly, I'm not part of it, the employers have reached agreement with the union on salary, so now this goes into the work protection and the benefits. But this is good, and I applaud the union, all right? The last thing we all needed was more inflation. I know that what their needs are. I'm glad they talk tough, but act prudently. Congratulations. U.S. September non-farm payroll data coming out tomorrow. They're looking for about the same they had, 143,000 new jobs versus 142. The jobless rate not expected to change at 4.2, and the hourly earnings up 0.3. So the other thing that goes on with the market is obviously everybody's on pins and needles about what the U.S. and Israel will or won't do. I'm not going to repeat it. I talked about it in the financial update and gave my opinion on it, and I'm going to leave it at there. I'm not trying to preach politics, but the simple fact is it's a situation that has gone on literally in the Mideast since the beginning of biblical times. Yes, it's gotten more modern, but it's all about getting rid of the Jews one way or the other from Iran's point of view. I'll leave it at that. All right. So now when we come and we take a look at everything, in China things are so different. You can see market doesn't stop going up as they think we're going to get even more out of this. Obviously, as Dragon Week ends, and tomorrow I think workers go back to work. We will see what the public does. I believe it was the Taiwan exchange. There's been such an influx. They have to suspend trading for 2 days, and the money's still coming in. And everybody's buying up anything because they think that China has a solution. And this is the beginning of whatever it's going to take, trillions, whatever it's going to take. China's woken up and said, we've got to alter what we're doing. The people aren't buying into this, and I believe that that is it. You've got to get consumer confidence back. Once you have the people behind you, you can do a lot of things. So Linn continues to run to the upside. You're over the Bollinger Band, or are you? You move to the right-hand side. What did I tell you yesterday was going to happen? I said, you rarely go beyond 7 days. You can get to 9, it's hard, and you'll move to that right-hand side. Well, you did it, all right? That doesn't mean you can't go higher, but you've gotten away from staying over the band. That's very important. But as long as the embedded reading is up, the first hard breaks are still going to get bought. You have an outside day up today, so a warning sign would be out of nowhere taking out today's lows. That could tell you maybe you're going to head back into the 200-day range territory. Until that, it can just go to the moon. There's no way to know. All right, you're in a vertical price rise. Rivian as the bearish embedded reading. That's the very first thing I look to see on a chart. If you haven't taken my enhanced Bollinger Band course, go and learn it. And it's right there on our website, irapstein.com, under courses. But as you take a look at this, this is your momentum locked in. So as prices give you bounces and so on, the pros are selling until the red line closes over 21. And that often means not only did you lose the downtrend, but the odds are that the closest moving average, in this case the 18 in price, will come together. You're not there. You're still at the point where the market's getting sold on the rallies. When we come to uranium, was this the beginning of where the market wants to fall back into here? Doesn't have to be. You still have the bullish embedded reading. So you pay attention to those. I do think the market gets bought starting from basically 28.76 all the way down to 27.30 in this market, and stays being bought as long as the embedded reading stays in place. Dell, we have a market with a higher high, lower low, fighting a battle right now at those numbers. We've had the correction. This is where the support should attempt to come in. The first spot's the 18-day average, right under it, as I said yesterday. Next support's right there, and the market's other traders are seeing what we're seeing. When we look at Toll Brothers, now that you've pulled back to the 18-day average area, what do we do next? You didn't quite hit it. You lost today the bullish embedded reading. So whatever I do, I take a look and see if the market lost that reading, and if it can't get it back tomorrow. If it can't get it back, the market's going back to that 18-day average, which from today's low is about 60 cents before it gets back over 156.03. But the importance to me is that the market has had a correction back into a support zone, and to me, even if you lose the embedded reading, I'm not looking for a big decline in the market. That's the more important thing. It's a pullback. XHB, same identical thing, and you can see it's about 40 cents away from that band. It too lost its embedded reading. So no, these aren't buys in my opinion right here. These are markets that still could fall a bit more, but I think its downside is quite limited. In XLF, you are fighting a battle for direction. You do see that. You're just stuck at that 18-day moving average of closes. When we look at XLI, if you lose the embedded reading and you're flirting with it in the morning, it's going to be real important. Since you closed down in the bottom part of the range, you're probably going to lose it on the opening. If it stays lost, then you come back to 132.83 or wherever the 18-day average is. It'll be a little higher than that. You're going to drop from values back here, and you're going to add whatever tomorrow's value, so that will climb. That's how the moving averages work. Energy. I want no part of being short any energy. And the reason that you'd say that is we don't know what Israel will or won't do. They're being pressured tremendously from the U.S. not to go after the nuclear, but it certainly sounded today, to me at least, like the Biden administration hit the light switch and said, you want to take out the ports? You want to go after the refinery? Maybe that's good. What they're really saying, I think, would be if that happens, the U.S., the U.K., France, Israel, everybody's got to coordinate to try to keep the Strait of Hormuz open, because the one thing that Iran would do in its vengeance is try to close that and hurt the world. Oil. Remember, if they don't have ports and they can't ship, more oil would come out of Saudi Arabia, Kuwait, and so on, and the strait becomes very important. Iran has protected that strait. I don't remember them not protecting it since the Shah left, okay? And I was there to see all that in terms of, old enough to understand what was going on, and I've watched it, and I watched what went on there. It'll be interesting, to say the least. In the gold market, it's marking time. It's waiting to see what the reaction is and what to do. I think you'd agree that's what you have. You have a bullish reading until you lose the embedded reading. It's bullish, but I'm not seeing that in the gold miners. I'm not seeing it in XME. I'm not seeing it in a lot of the other parts. You are not even that bullish in the silver. I'd love to get more of a correction in the silver market. I think that these markets are a buy because of China, because of the U.S., because of Europe. Everybody's going to lower interest rates to make industry come back. People have jobs, defeat inflation. You realize that. And these metals get a burst of action because of that. Copper the same, but you got up so high. Tomorrow when you reopen, right off the bat, you're going to lose the embedded reading. You'd have to jump dramatically for it not to happen. And I'm still saying, ideally, I'd love to see the market back in this range, 44.63 area. BND, will it get a bid? It's certainly not getting one right now. It goes right on its butt, but it's oversold and it's under the Bollinger Band. Does it have to fall anymore? Not really. But I think part of what's hurting this market, part of what's hurting all the yields on bonds and notes, has been that the jobs data that's been coming out, be it JOLTS, be it ADP, Challenger Gray, and tomorrow maybe we'll see what the U.S. jobs report is, it has not been weak. It is holding up. When you look at the ISM services number today, strong, especially in the jobs categories, all right? So you're thinking that the labor is going to fall apart. It hasn't, and that's got traders reassessing what is the Fed going to do? What is the neutral rate going to be? And that becomes problematic for the market. The dollar up, obviously, on world tension with all this, and interest rates not falling the way the traders thought they would be falling right now. And I wouldn't be surprised if the euro ends up down at the Bollinger Band and tries to bounce away from there. So that's what I'm basically seeing. I'll be talking about this and doing my daily newsletters, which you can get free if you haven't ever seen them. They're on our free offers part, along with the Linn letters, our price counts, the free courses, the Arun indicator video course, how do you plot it, how do you use it, pivot points, how do you plot it, how do you use it. Our charting software, not only the one I have here, but we have a web-based one called QT, our mobile applications. Give it a try. Go to irapstein.com, free offers. You click what you want in the offers. At the bottom of the page, you put in your name, your email, and away you go. Move your cursor to the top, you'll see an icon, or just go right there. In any case, I'm Ira Epstein. You have yourself a great evening. I'll catch up with you all first thing in the morning.